Bismillahirrahmanirrahim. Okay, dear students, let's start the second live revision class of PM. The session is March 25. The name of the question is Midhurst Company, came in December 2020. Let's see what they're asking. It's a section B style question. In section B, what happens? You will be having a small scenario, and on that small scenario, examiner is going to set 5 questions. Each will have 2 marks. So mostly this question is on life cycle costing. Let's read the scenario. Midhurst company manufactures air conditioning units and is considering an investment in a new unit that will be used in modern office buildings. Okay. Advances in technology mean that this unit is more sensitive to changes and variations in temperature, and therefore it can regulate airflow and heating more efficiently. Midhurst company's competitors currently do not have an equivalent product that can offer these features. So it means if you are going to launch such a product, you will be getting a competitive advantage over your competitors. Plus, in life cycle costing, what happens? Then we actually estimate the cost from day one till the day last. Total cost will be estimated, and then we do estimate that over the life, how many units that particular products we will be selling at how many units. So entire cost divided by the entire number of units over the life of that particular product, that will give you a per unit cost. And when we say life cycle costing, basically this concept is applicable on those products they are having a short life cycle, and due to advancement in technology, due to more involvement of the technology in products, now the life cycle of the products, it is coming short and short. For example, let's talk about the cell phone. Obviously right now, previously it was you can say iPhone, it was 15, then now they have launched 16 as well. So basically, in a short life cycle products, normally companies they follow life cycle costing, because life cycle costing can give you a really good information about the profitability of the product. And if you measure the performance of the product, how profitable is that product going to be on the basis of life cycle costing, that is more better approach as compared to the traditional performance measurement, because traditionally we measure the performance on the basis of periods. So here, instead of periodic performance measurement, we'll go for over the entire life. Midhurst company expects to sell 10,000 units over the predicted 5-year life cycle of the unit. The finance director has just prepared the initial costing for the unit as follows. So Midhurst company is expecting they will be selling 10,000 units over the predicted 5-year life. So here you need to know one thing. Short life does not mean, short life of the product does not mean less than equal to 12 months. Does not mean that. You can see over here also, the product is going to have a life of 5 years. Okay. Initial costing for the unit are as follows. R&D is 6,200. We have ignored 3 zeros. Okay. Design cost is 33,450. Never forget one thing. We are ignoring 3 zeros. Then we have marketing cost. Variable product cost per unit is 42. Logically, it is 42,000. Again, we have obviously ignored 3 zeros. So 42 multiplied by 10,000. That will give you the variable production cost of 10,000 units. We have fixed production cost 98,470. We have a variable distribution cost multiplied by 10,000. That will give you the total variable distribution cost. Fixed distribution cost is 10,300. Variable selling cost is 4 multiplied by 10,000. That will give us total variable selling cost. Fixed selling cost is 7790. Administration cost is 23,450. So basically, examiner has given us the total cost of this product. Okay. The finance director plans to use life cycle costing to measure the profitability of the new product. Very logical. The chief executive has asked for more information about life cycle costing as they are not sure whether it is right method to use. Okay. The production director has reviewed the costing in detail and suggested a couple of changes. They are enthusiastic about the product and believes that modification could be made to prolong the product's life, but wonders whether the best time would be to make changes to the product. So basically, they are saying the production director has reviewed the costing in detail and suggested a couple of changes. They are enthusiastic about the product and believes that modification could be made to prolong the product life cycle, but wonders that what would be the best time when we are going to do the changes to prolong the life of the product. Basically, when we say just a life cycle of a product, so normally what happens, uh, a product goes through number of stages. Like there will be a stage, initial stage of the product, then growth, maturity, and after maturity, we know that after the peak, the decline comes. So basically, when your product reaches at a maturity stage at peak, then organization they try to bring changes in the product so that they try their best to prolong the peak period, maturity period as long as they can, because they know that after the peak, after the maturity, there's going to be a decline period. Okay. According to the life cycle costing method, which two of the following statements regarding the stages of the life cycle are true? At the introduction stage, further capital expenditure will be needed as production capacity will need to increase to meet the demand. It's very true. Basically, at the introduction stage, further capital expenditure will be needed as production capacity will need to increase to meet demand. So basically, capital expenditure is obviously likely to be increased at the introduction stage because we normally decide the entire cost at initial stage rather than, after some time we realize that now we should be putting more money to increase the production capacity. So actually we estimate each and everything at a very initial stage. So at the introduction stage, capital expenditure is likely to increase, will be needed. So point number 1 is correct. Let's go for B. The maturity stage occurs when the market has reached saturation point. Actually, when market has reached the saturation point, that is the decline stage. That is the decline stage. And bought enough of the product. No, this is not a maturity stage. This is actually representing a decline phase. So statement 2B is actually representing the decline stage rather than the maturity. The majority of the product life cycle costs are determined by decisions which are made at the design and development stage. Again, very true. Basically, the majority of the product life cycle costs are determined, is decided by decisions which are made at the design and development stage. So around 90 to 95% cost you will get to know at a very initial stage. Okay. The growth stage, when sales will have reached their peak and becomes stable, will be the most profitable stage. Actually, this is not the growth stage, this is the maturity stage. D is actually representing the maturity stage. So D is actually representing the maturity stage. So basically here, statement A and C, they are correct. Statement A and C, they are correct. Now what they're asking, what is the cost per unit for the new air conditioning unit using life cycle costing to the nearest? What is the cost per unit? So first of all, we have to estimate the total cost, then divide by the total number of units. So let's come here. Okay. Let me use the calculator. Obviously, 6,200 will remain 6,200. 42 multiplied by 10,000, it becomes 42 multiplied by 10,000. That is 4,20,000. This will become 90,000, 9 into 10,000. This is 40,000. So let us add all the cost. 6,200 plus 33,450 plus 1,77,685 plus 4,20,000. 4,20,000 plus 98,470, 98,470 plus 90,000 plus 10,300 plus 40,000 plus 7,790 plus 23,450. So I'm getting the total cost 907345. Again, don't forget we have ignored 3 zeros. So total number of units, they are 10,000. It means 907345. Take the 000 as well, divided by 10,000. So total cost from day 1 to the day last divided by total number of units. So that was simply gives us, just a minute. I'm getting 90,734.5. 90,700. Just a minute. So 907345 000 divided by 10,000. So I'm getting 90,734.5 with a little bit rounding off. 90735. So it is 90,735 per unit cost. So to the nearest dollars, that is 90,735. Okay, question number 3. The production director has suggested that the following change for the costing of the new unit. The production director has suggested the following change for the costing of new unit. Okay. Currently, material costs 20% of the variable production cost per unit. So whatever is your variable production cost per unit, 20% of that is material cost. Okay. One of the materials used in stainless steel, which is budgeted, at 2000 per unit, but an alternative corrosion resistance metal costing 25% less can be used. The production director believes a 15% discount can be negotiated for the remainder of the materials. What would be the revised material cost per unit? Number one, currently material costs are 20% of the variable production cost per unit. Come here. Variable production cost per unit. Basically, variable production cost per unit is 42,000 because we have ignored 3 zeros per unit. 4,20,000 is the total production cost. This is total. 4,20,000 is representing total production cost of 10,000 units. But if you ask me what is the variable production cost per unit, it is actually 42,000. And question says, currently material costs are 20% of the variable production cost. So variable production cost per unit is 42,000. Okay. Material is 20%. Material cost is 20% of that. So 42,000, 20% of 42,000 is 8,400. Okay, now come back. One of the material used in stainless steel, which is budgeted 2,000 per unit. But an alternative corrosion resistance metal costing 25% less can be used. So out of this 8,400, there's one component of material which is costing 2,000 and that can be replaced with an alternative component, and alternative is 25% cheaper than that, which means that if I take 75% of this, so alternative is having a value of, just a minute, 2,000. The value of the alternative is 1,500. So 8,400 minus 2,000. Remaining material is having a cost of 6,400. Okay, now what question says? The production director believes 15% discount can be negotiated for the remainder of material. So remainder of the material is 6,400. The breakup of 8,400 is 2,000 is a particular component which can be replaced with an alternative which is 25% cheaper than this. So what I did, I took 75% of 2,000. It means the alternative material will cost us 1,500. And the production director believes that the remaining material could be arranged at a 15% discount. It means if I take 85% of this, 15% discount means 6,400, take 85% of that. It is 5,440. It means after these two changes, what will be your material cost? 1,500 plus 5,440. So it will be 6,940. So the revised material cost will be 6,940. Okay. The production director has also asked about the implications for production planning if the company wishes to extend the product life cycle. The production director has also asked about the implication of the production planning if the company wishes to extend the product life cycle. At what stage of the life cycle is the new unit cost New unit most likely to undergo product development. Actually, that is the maturity stage. It's not introduction, growth, and decline, because they're asking at what stage of the life cycle is the new unit most likely to undergo product development. So normally product development that will occur at maturity phase, because organization they will try their best to bring new changes into the existing products, so that maturity period could be prolonged as they can, because at a maturity stage, at peak organization they will be earning a really, obviously, a really good profit, so they will try their best to extend the maturity period as much as they can, because after maturity there's going to be a decline. So at what stage of the life cycle new unit most likely to undergo product development? That is maturity. The chief executive wants to be briefed on advantages of using life cycle costing. Which of the following statements relating to the advantages of life cycle costing are correct? Okay. It draws management attention to all costs related to the product which occurs costing method usually treat as, obviously. Other costing methods usually treat as period costs, like fixed costs. If I talk about absorption costing, so we take fixed cost as a period cost. So basically, here what is happening, it draws management attention to all costs, like we did in this question. I think it was second question, where we calculated the total cost of the product, in which we included each and every cost. So obviously statement number 1 is correct. Statement number 2, it focuses on measuring a product cost from the concept to withdrawal rather than reviewing the cost on a periodic basis. I think we did discuss that life cycle costing gives you the proper information that how profitable is your product is going to be, because we measure the performance of the product over its life rather than on periodic basis. Okay. It focuses on what consumers are prepared to pay for a product and establishes the cost budget way. Basically, statement number 3 is target costing. It is not the life cycle costing. So point number 3 is an advantage, but it is an advantage of target costing, not the life cycle costing. It aids understanding of the relationship between decision at the design stage and cost of other functions such as marketing. Yes, that life cycle costing will help you in understanding a relation between decision, design stage, each and everything. So actually statement number 1, 2, and 4, they are correct. So statement number 1, 2, and 4, they are correct. So the right answer is B. Okay, now students, please, you have to listen carefully. Actually, we did revise ABC costing in the previous class, if you recall. And here we are discussing a question on life cycle costing. And I did mention how many topics we are going to revise today. And let me just share a homework question. And I really want everyone to attempt this. Obviously, I'm going to discuss that question in a coming class as well. But I really want you guys to at least try to attempt that question. So let me share that question first. Okay, students, I really want everyone to attempt this question before the next class. The name is The Ask Company, came in December 2021. Mainly this question is on target costing. So before I would say attempting this question, you should just revise the target costing and then attempt this question. And I really want everyone to attempt this question before the next class. And those, even they are watching this lecture on YouTube, I really want you guys as well to attempt this question and do share your answers on our YouTube channel. And then obviously in the coming video, you can see your answers, that how many of them are correct, or maybe all of them are correct. Another thing is, I really want every one of you students, please do attend these live revision classes, because our live revision classes, they give you the opportunity that you can interact with your tutor every week. And obviously, WhatsApp group is there where you can ask the question and you will get the response directly from me. But do not miss this live revision classes. They're the game changer, I'm telling you. So thank you very much for attending today's class. And I really want everyone to be in the next class as well. In the next class, number one, we'll be discussing this homework. And after the homework, we are going to discuss another topic for the revision. That is, we'll be discussing a question on throughput accounting as well. And in live revision classes, as we started from a very first class as well, so we will be revising the entire PM through questions. So through questions, we'll be discussing, inshallah, the entire PM. So in the next class, first, I'll be discussing this homework. Second, I'll be discussing the topic that is throughput accounting. So we'll be doing the question on throughput accounting as well. So thank you very much, students, for today's class. See you all, inshallah, in the next class as well. Thank you.